Good afternoon, ladies and gentlemen. Welcome to the CATENA Group PLC investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and we'll send you a notification once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we'd like to submit the following poll, and I'd now like to hand you over to Matthew Farnham-Schneider, CEO of CATENA Group, and Stephen Cracknell, CEO of Insight Capital. Good afternoon.
Hello, and thank you, Mark. Hello to all of you. Thank you so much for taking the time to meet with us today. As Mark has said, my name is Matthew Farnham-Schneider. I'm the CEO of CATENA Group. And our purpose for wanting to meet with you today is to give you a bit of background on the transaction that we announced last week and our acquisition of Insight Capital. As Mark has mentioned, we have with us Steve Cracknell, who's the CEO of Insight Capital. We got to know Insight, or I got to know Insight about 2 years ago, and have been incredibly impressed by the work that Steve and his co-founder, Warren Pearson, have done in setting up this company, and the incredible work that they've done in helping asset managers to make the transition into a data-led, a data-centric investing strategy. And I think that's something that you're going to hear a fair amount about today from Steve. And it really is a quite critical step change within the asset management industry, and one that we are realizing, and many asset managers are realizing is a critical component to their business going forward. So really what interests us in Insight Capital more than a year ago when we made our initial investment in them was the combination of data science, engineering, and very clear sectoral knowledge that the Insight Capital team have brought, and the success that they have had with helping asset manager clients to make this transition. And so that was the rationale for CATENA Group to make its initial investment in Insight just over a year ago. And now the rationale for the acquisition of Insight Capital, and very much our focus on developing this business and helping the business to help its customers and future customers to make this step change, to make this transition. So with that all said, I will turn you over to Steve Cracknell, who can speak to you about the history of Insight Capital and some of his background, as well as a little bit further about where we are taking the company going forward. Thank you.
Great. Well, thank you, Matt. Well, I'd love to say it's good to meet all of you, but we can't see anyone. But it's good to be sitting here today. Just to, I guess, contextualize why Insight Capital started, and it goes back just over 3 years ago. It was a collection of, I guess, skill sets that myself and Warren had acquired over almost 20 years of working at Goldman's in financial technology, building financial systems, building trading systems, and learning, I guess, a rigorous way of building, hardcore software that's repeatable and scalable. The second part of that, the story, which is ended up running a machine learning company in Silicon Valley, and moving out of a big corporate, banking environment into, the West Coast of America. You're exposed to, cutting edge technology, cutting edge cloud, innovative machine learning technologies. And what was, I guess, interesting through the experience is that if you combine the two, the one bit of discipline around what I would call the banking expertise and then the Silicon Valley creativity, you can create a very unique combination of product offerings. And this is something that we assessed to be lacking in the asset management industry, an industry that's typically made a lot of money. They've got a group of very smart investment professionals, but haven't had the opportunity to take advantage of modern tech. And in 2017, we said, this process of being able to take advantage of a cloud environment requires something called DevOps, or development operations. Or another way of thinking about it, it's plumbing. How do I get data from my computer onto a server really quickly? And then if I want to do a computationally heavy algorithm, how do I scale from one computer to 1,000 computers? And that plumbing piece is an important component. The next segment to that is to say, well, what's the business driver? Having a bunch of data scientists and engineers in a room together might generate a lot of interesting results, but are you going to make money off the back of it? So you need that business driver. When you combine the business with data scientists, with the engineers and the cloud component, you get a very unique offering. And that's kind of where Insight started. Our starting point was to develop a suite of machine learning classifiers that would read through earnings call transcripts and pull out what direction companies are going. Are they focusing on technology strategy? Are they focusing on cost-cutting, M&A? And we thought we were really clever. And we went and pitched this to a bunch of asset managers. And they said, wow, this machine learning and AI stuff is phenomenal. We're not that interested in your classifiers, but could you do that for us? Could you come into our organization, help us build this cloud-based infrastructure and transform our data into something that's useful and actionable to us? And that's really where we started. What we learned very quickly was that the skill set that we brought was in very high demand. We were able to, charge very good consulting fees. And within, 12 to 14 months, we were a profitable business. And we grew quite quickly in the first 18 months. And simply doing the same thing, build an infrastructure that can support scale, integrate machine learning with a business overlay. And that was the kind of, offering we were providing at that point. Through the consulting experience and developing solutions for individual clients, a theme started to recur. How do I get third-party data into a machine-readable format? How do I integrate custom or proprietary data with third-party data? So we built a data framework. How do we get data out of Excel into Python? How do we get data out of Excel and convert the Excel formulas into Python code into a database? So we built Exceliton. Once you've done the data transformation and once you have that information in a database, how do you optimize it? And then how do you then overlay machine learning algorithms to look for alpha opportunities? And this is where the InSig portfolio or Portfolio Insights is a product that started to develop. Interestingly, when we first met Matt, he said to us, hey, you guys are doing really well as a consulting business and you are effectively providing products to your clients. Why don't you guys become a product company? And initially we played a bit hard to get and we said, well, this consulting gig is doing okay. We're generating good revenues. But I think, to be fair to Matt and kind of his vision on where the growth potential was, they said, look, as a product-based company, and a company that already knows how to scale based on our kind of historical experience, the scope for growth is massive. And if we can help you take your skill set, productize it, potentially we can grow this into a big company. So that's where the conversation started, and that's also where the initial capital injection came just over a year ago. And I guess coincidentally, we'd, verbally agreed to start focusing on product and taper off on consulting. And I say coincidentally because that's also when COVID kicked in. And it's very difficult to sell consulting services when you can't go and visit or see any clients. So we really did focus all of our efforts, all of our engineering skills on building each of these products over the past year. Fast forward to the end of 2020, the demand we were seeing from asset managers we were talking to was immense. And the same questions were coming up. How do we get our data in? How quickly can we get signed up? What are the optimization strategies? And that's really what solidified the decision for us to merge and join forces and list INSIG AI as a new machine learning business. I'll pause there for a second so I can have a sip of water. I don't know if you have anything to add to that.
No, I think that's right. What I put on the screen here is an outline of the INSIG products. As Steve mentioned, the core products at this point are the INSIG portfolio and INSIG data products. Those are the ones that are in production and being used by clients. One of the products that we're most excited about during the course of the coming months is the INSIG ESG product, and Steve can speak to that better than I can. But effectively, it solves it helps to solve what has been a quite critical and important challenge within the asset management space, and that is how do we define an ESG compliant universe of companies, and how do we do that credibly? A number of other entities have attempted to provide ESG scores and some sort of confidence around ESG compliant companies, but much of that is being done in a very opaque manner, and you're relying upon, you are essentially leasing the confidence of another provider, a MSCI or someone like that. Whereas the way in which Steve and the team have gone about addressing this challenge is a data-centric method, a really looking for what evidence can we provide that a particular company is either ESG compliant or not. But then also, how can we do that in a manner that enables any individual investor, any individual client to apply their own structure, their own sort of weighting system to what they perceive to be ESG compliance. Because we've recognized, and I think much of the industry is recognizing, that ESG can mean something different to different investors, and their appetite for certain types of environment, social, or governance risk will be very different according to whichever individual asset manager or even investor you speak to.
Yeah, I guess that's a very good description, Matt, of the thought process, and use the phrase data-centric. I guess an interesting anecdote around machine learning and AI is that it sounds very interesting. It sounds very exciting. The promise of it is the appeal and what people want to talk about. But when you step away from it for a second, in order to get the value out of machine learning algorithms and artificial intelligence capabilities, you have to have the data. And the data has to be cleaned, it has to be transformed, and it has to be stored in a machine-readable format. And that process is incredibly difficult. It's not pretty, but it has to be done. And in each of the products that we've developed, the theme is exactly the same, is you have to do the heavy lift around the data transformation first. At the point at which you have that information stored in an accessible database, that's when you can do the interesting stuff. In the context of ESG, the starting point was, let's go and see what's out there in the market today. And as Matt said, there's lots of scoring systems. There's some very incredibly reputable providers of scores, and they've done their own analysis. But they had to get the same underlying data, the same underlying metrics, the same annual reports, earnings call transcripts, sustainability reports. Now, from an asset management perspective and regulatory requirements, they have to stand behind their investment decisions, and they cannot just rely on an independent score from a third-party provider. So they have to validate the information. And as such, they have to then go and read each of those documents and each of those reports. And if their investment universe is 1,000 companies, you now need to read 1,000 annual reports, 1,000 sustainability reports. So our starting point was to say, well, this information is already in our database and we can mine it. Let's build a suite of text-based machine learning classifiers to be able to surface evidence of E, S, and G issues. And if we think of environment as a pillar, the issues that fall within the environment are climate, GHG emissions, waste, and the governance. It's around management and control. So we've created a suite of 15 discrete machine learning classifiers that can speed read these documents. Now, the value of that is, I think, relatively straightforward. I have a universe of 1,000 companies. I have 3 sets of documents, and I have 3,000 documents to get through. The machine learning classifiers will surface the evidence that is relevant and necessary to validate what a company is doing or is not doing, as the case may be. The second part of that is to say, well, if the classifier can get me to the content quickly, I then want to interrogate it. So that's where we do data engineering and we do smart software development, where you can actually click through and you can get down to the actual core or underlying data document. This idea of the talk, that's, I guess, what the classification part does. It's let's identify what companies are talking about. The second part, which Matt mentioned around the metrics, it's the underlying metrics that are published. What are the targets? What are the goals that companies are trying to get to? What are their emissions? What is their usage of water? And that database part of it, or the numeric part of it, is getting tied together with the text-based part. And what you end up having is a research tool that allows you to see what a company has said and validate whether it's actually what they've done. And the feedback we've been getting from our asset management, I guess, inner circle of good clients or close clients, is that it's exactly what they need at this point in what is quite a difficult ESG environment, because the thing, the requirements are changing constantly, the standards are changing constantly, and this second layer of interrogation has a high demand at the moment.
So I've just turned the slide deck to the ESG product summary slide, so that you can see a bit about how the product looks, and to note, this is a product that is in a very early alpha stage at this point. So we're having conversations with a number of existing consulting clients and a number of other interested parties on the early stage of this product. But we look forward to launching it fully by the third quarter of this year.
Yeah. I mean, actually, another, I guess, belief we have as a business is that. Sorry, I get it. Someone's trying to ask a question. Is around how we develop the software and how the software should look. In a what we call a modern tech world, where as consumers of things like Uber or Deliveroo or Amazon, the applications we get used to using and being able to log into on our phone, the usability has become so seamless and easy. Part of what we believe in is that the tools we develop have to have that same kind of usability, and that the days of antiquated software and very difficult to use systems isn't going to cut it. And that is also part of the challenge to do something and make it seem easy to do is engineering, from an engineering perspective, is very difficult. But we think is absolutely critical to the success of our business, because if we can't make machine learning models accessible and we can show our workings and we can show people what the models are doing and the assumptions that they're making, we're not going to get people's confidence to use those systems. So that's part of what our delivery is that we show what we do, and the tools that they can access it through, which is it's a web application, has to look nice, and it has to feel nice, and it has to navigate well. And we think that's really the new standard that certainly financial tools will have to meet. We hope to be at least set the bar for what will become accepted and expected by investment professionals. But again, it's having this combination of the hardcore engineering and the data science to interrogate and surface the important data. And then the second part of it is to make it easy to read and interact with. So again, that's, I guess, part of our product mandate is to make sure we deliver a product that's, gives me the information I need to make an important or not important, but a good investment decision, and looks nice as well. I think that's really where we're balancing ourselves.
Well, I think something that Steve just said there is quite important to reinforce, which is the InSig AI tools are not intended to supplant asset managers or fund managers' investment decisions themselves. They're meant the tools provide further information to augment the strategies, to help them to gain value from vast amounts of data, and data that in its current form often just becomes noise. So this provides a structure and an ability via the machine learning tools, via the front end applications to gain value from that. And I'm just going to turn over to a slide that outlines the InSig portfolio product, which perhaps Steve can provide a little bit more detail around exactly how this product works, and also the development path that we see for it over the course of the coming months.
So I guess some of the feedback we had early on around the application or usage of machine learning models is that asset managers, whilst they think it's really interesting and exciting to do, they don't want an answer that comes out of a black box. They don't want to pin their investment decision on something that they don't understand and that they can't control. And in the context of the visual image of a black box, if you give all of your information to a data scientist, it's the same thing. Now you're entrusting another person to tell you what the right thing to do is. And very early on, we decided that when we run machine learning models over data, we will show the assumptions that those models made. We will show the weighting, the scoring, each of the components that was used. And the minute we, I guess, surfaced that information, the trust that it engendered through those investment professionals was immense, because for the first time they could say, I understand what this is doing. And then the thing that we saw, which I think really is going to differentiate our product, is that they have the opportunity to overlay their investment expertise and their flavor and their experience of what they know actually is going on in the marketplace. So for example, in this image, it's showing 3 lines which have outperformed a benchmark, and those are 3 independent machine learning models. Now, we're not prescribing which is the best model to use. We're simply saying these models have made assumptions based on 20 years worth of historical financial data, which by selecting a portfolio of companies has outperformed the benchmark. That's step 1. Step 2 is to say, okay, let's go and see which assets those are. What is their distribution? What sectors do they fall within? Which regions do they make up? And again, showing all of the underlying workings or the data that underpins it allows them to then say, okay, I'm now going to make a more confident investment decision. The other value of the application of the models is that obviously we can't look into the future and we can't have perfect foresight. But when the market changes, because the models can run historically over similar market periods, it helps investors understand to say, okay, when we were in a high volatility period, what did it look like then? Which companies were selected then and why? And then that helps inform their next decision or the next part of their portfolio construction process.
And I think actually that also is a very important point, that what we're seeing from quite a few of the existing clients and a number of the potential clients that we've been speaking to is that they're starting to recognize the speed at which the markets are adapting, and their prior operational structure for adapting investment strategies was potentially too slow to match the pace of the adaptation of the market. And so these tools, the Insight Portfolio tool in particular, gives them a suite of tools and insights that allow them to more rapidly adapt to the changes within the market and to recognize those changes more quickly than they could have previously. What I might do is just turn to the other slides on the three other products that perhaps Steve can just walk through very quickly, and then I know that a couple of questions are coming through, but perhaps we'll work through these and then turn to some questions.
So, I mean, we mentioned the data product, which is really it's a data transformation framework. It takes data from third-party sources, and then this notion of cleaning, transforming, and making machine readable, it's something that's fundamental to any first step to being able to do machine learning or AI. Offered as a framework, it means that asset managers that haven't traditionally had technical teams or engineering teams, they then don't need to go and hire a data engineer, DevOps engineer, and a data scientist to get over that first hurdle. So this framework really facilitates them, saving probably 12 to 18 months worth of effort to get the benefit of some kind of machine learning output. On the docs side of the equation, again, coming back to this challenge around data, it's all very well if you can find a third-party provider that will give you information in a semi-structured format. But if you have to extract information from PDF documents, from Word documents, anywhere that it's text-based, there's a huge amount of manual work that gets done, copying and pasting and retyping. And the system we've developed really uses a combination of best-in-class text and table extraction technologies. And we've wrapped it into a product that allows you to upload a PDF, extract the text that you want. And then the second part of that is bringing meaning to it by allowing you to tag it. So you tag the content. The value of tagging content means you can store it in a database and then it becomes useful. Something we find again and again with our clients is that they have a huge amount of unstructured text-based data stored in many, many different formats, in many different locations. And you cannot then get the value of any kind of machine learning because there's no way to access all these disparate systems. The Insight Docs system allows you to structure the data by getting it out of an inaccessible format into an accessible database format, which you can then search across and run machine learning models across. And then finally, I mentioned this very briefly, Exceliton. Again, it might be surprising or it might not be surprising when I tell you this, but there are many of the clients that we've met run very important processes out of Excel spreadsheets. And Excel is the best and worst tool in the world. It's phenomenal because it's very easy to use. It's phenomenal because it has ability to get things done very quickly. Where it becomes, I guess, scary is that there's a point at which it is no longer fit for purpose. And when models become that big and that sophisticated that they should be in a database, that's the point at which Excel has run out of its use. Part of what Exceliton does is evaluate the risk of a spreadsheet, how many functions and formulas it has, how many dependencies it has spread throughout that spreadsheet. But then, and I guess most importantly, it converts the Excel formulas into Python code. Now, somebody said to me, well, that doesn't sound that exciting. And I said, well, it's actually not. I said, but if we can't do it in an automated way, you have to have a human typing those out. And if you can imagine a spreadsheet of 1 million rows of hundreds of tabs, That's millions of keystrokes. So again, what we're effectively selling is we're compressing a problem, which is let's get you out of this risky infrastructure into a proper database infrastructure quickly. And then the second part of that is to allow you then to carry on and get on with your business and apply machine learning and apply more interesting algorithms to your content. So I guess that's excellent.
And I think just before we turn over to questions, it makes sense to speak just very briefly about the so what. So how has Insight helped clients to optimize their performance, to increase returns? What have these tools actually resulted in from an Insight client perspective? And perhaps Steve can speak to that.
Yeah, so I mean, in each instance, this idea of modern technology of machine learning, it can solve different problems, and it's not always about can I make more money. It's sometimes about can I save money or can I save time. I mean, when we think of this idea of an antiquated process taking a week to run from end to end, that when you lift and shift it into a scalable database infrastructure in the cloud, and it runs 10 times faster, and all of a sudden something that takes 5 days now takes 2 hours, that's the kind of value that you can apply. And not only does it create headspace to think of applying your mind to do more important things, it also allows you to get to a wrong conclusion more quickly. And that's another, I guess, valuable part of this, the application, is that a lot of the times an idea doesn't render an actual result. But if you can get to that conclusion quickly, it makes quite a big difference. In terms of some of the clients where we've looked at in terms of portfolio optimization, very good strategy, well-placed market assumptions, well-placed factor selection. How can we make them select better companies? How can we make them select better companies at the right time or get out of those companies at the right time? And, we have examples where, we've helped a fund outperform their benchmark by 30 percentage points. Now, we can't take all the credit because they had a very good strategy. But where we can take credit is that the machine learning overlay helped them do much better. And that's really the kind of space we're playing in, which is to say, you're doing something well, let's help you make it better. Just having a breath.
Excellent. Why don't we, Mark, if it's all right, we're happy to turn to some questions.
Absolutely. Matthew, Stephen, thank you very much indeed for your presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Just simply type in your question and press send. But just while the guys take a few moments to review those questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation is ended, you'll be redirected for the opportunity to provide feedback in order that the team can better understand your views and expectations. Matthew, Stephen, obviously you've had some questions come through. If I could ask you just click on the Q&A tab and then read out the question where appropriate to do so and give your response, that'd be fantastic. Thank you.
Excellent. Well, I will play the part of moderator and help Steve to answer questions where I can. But why don't I begin with the first one here? What's a typical revenue model with a client? Is it a SaaS or a software as a service per seat model? And what's the sales process?
So I mean, in each of these products, and I think I'll focus on portfolio in the first instance, it is a per seat model, but because it's essentially portfolio and the data product are two separate products, but we sell them together. We look at a desk and we look at the usage of those two products on that desk. So we typically would like to sign up an individual user, but in most instances, it's 5 or 6 people on a desk. So that's really where we see us being able to do a couple of things. One, fulfill the requirements of a desk by delivering the product and the data. And what we tend to see is that desks have a split of experience. So you'll have people doing, the data part of it, the data collection part and the analytics, Then we'll have the portfolio selection, and then there's the kind of risk and attribution side of it. So within that, we're typically seeing a desk is around 5 to 6 seats, which we are selling that as a license. One of the things that I think differentiates us is that it's not us saying this is our proprietary data. We're taking the client's data into the framework and projecting it back to them through our application. So it's their information, it's their signals, it's their factors, it's their assumptions. And again, the reaction that we observed is that they can see their portfolios come to life in our application. And that's, again, I've used the phrase, it's engendered a lot of trust and a lot of immediate interest because they're drawn to it. They don't have to do any work to then make it happen. They have a system which is ready for them to use. So the goal is to sell the data as a service and the portfolio product as a license-based offering. What we see as part of our sales strategy is, and we've seen this with existing clients, is once we've sold to an individual desk, I guess word spreads quite quickly that there's this machine learning tool which is helping them make better decisions. The introductions to other parts of the business happens quite quickly. And the hardest part of the sales process is the vendor onboarding, having to fill out all the security questionnaires and go through the process of getting onboarded. And the typical sales process is an initial understanding of the client's strategy, getting their data into the system, which typically takes a couple of weeks, assuming that there's no super esoteric data, it's standard financial market data. And then they get to play with their own data in the system for a 3 to 4 week period. And then from there, it's the contract negotiation, the license negotiation. So currently, I think we're looking at about, it's 3 to 4 months, end to end. But I guess as we do more of them, we'll get quicker at it.
And that's specific to the portfolio and data tools, which require a fair amount more onboarding, whereas the ESG tool, when that launches, will be much it's much quicker for clients to be onboarded with that, because it's a web application that they'll just need a username and password for, and since it doesn't incorporate their own data, their access to it is a very quick switch.
Yeah, that's a really good point. And again, I guess the challenge stroke opportunity in the ESG space, there's not a lot of companies that provide the central repository of the data you need to get to a decision. So in offering that, the access is much simpler. In the future, we will have an ability for companies to upload their own data and use our machine learning classifiers to score their own data. But in the first instance, it will simply be, here is the data you need to make your decision, and we'll help you get there quickly.
And here's a rather related question. What are the typical contracts in regard to length, and are they per user or company-wide? So we've answered the per user or company-wide, but it might be valuable to speak about the length and how we anticipate with the portfolio and data product in particular, the length of those contracts and how that would work.
So, it's interesting. To this stage, most of our clients are kind of have a longer term investment strategy. So they're looking, they're not doing day trading. They have a longer term horizon. So the contracts itself are a minimum of 12 months, and mainly because in order to see the value of a machine learning strategy, when you already have a long-term investment strategy, means you have to play it out. So at a minimum, it's 12 months, and there's a couple of bits in there. Once the data is in the system, if reviewing your data set on a quarterly basis or a monthly basis, the data framework is going to ingest that data on that periodicity and then refresh. So each time there's a refresh of data, a new set of financial reports, new set of accounts, new set of numbers, you have an opportunity to run the models again, and you have an opportunity to reset and check what you're doing. The contracts we have in place at the moment have perpetual and just rolling. So we don't even have an end date at this point, mainly because part of it relates to the investment strategy, that it's going to be a 3 or 5 year investment horizon. And so we think that actually plays well into our business model, because we're not on okay, if this doesn't perform in 3 months, you're out. It's actually based on the fact that, the more data you have in the system, the better decisions the machine can help you make. So, I think realistically, 3 years will be a minimum term at which someone may decide not to do something. But I don't know. I think that seems about right.
Yeah. Well, I think the experience of the Insight Capital business thus far is that with each of the consulting clients and as we're onboarding product clients, that over time you become even more and more embedded with that client strategy, and the reliance that the client has on the tools just grows. I think what's core as well on the portfolio and data side is that the transformed data becomes part of the portfolio application offering, or in some instances a broader offering to the institution. But to the extent that a client, if and when he or she wanted to end that license, then the transformed data is no longer available to them. So that becomes a very difficult choice to walk away from the license. In terms of other questions, we have one. Can you explain who else competes with you and what sets you apart?
So yeah, I mean, this is a question that I actually had a lot over the last few weeks from different journalists, and it's a very interesting space, because there are what I would call the mega data providers. Companies like Bloomberg and Capital IQ and Refinitiv. They provide huge data sets, and they provide it in slightly different formats. Either you can get a terminal and you can pay a terminal license and you can access the information. Or you can get this huge data dump or API feed. Now, they are literally at polar ends of the offering, because if you use the terminal-based system, you then have to do the legwork around getting that data into your format or into a spreadsheet and to do something with it, and then try and do machine learning. So there's quite a heavy lift. If you go for the option of getting all the data in a massive database, which is what you can buy, you're going to need to hire a data engineer and data scientist, et cetera, et cetera. So in the context of the mega data providers, we fit in the middle, where we're doing the transformation and the packaging and making it accessible. So I think that's one example of where we fit, and while I think we're different to what they're offering. There are quite a few, I guess, smaller companies that offer specific things around signal generation, about text-based classification.
I do apologise there to investors. The guys have just clicked out. Give them 2 seconds and they'll come back in. Thank you very much. Thanks, Stephen. Just follow the same process of coming through, and you'll be presented with the option just to reconnect. And there you go.
Hi, sorry about that. We had
no problem, guys. No, you're back. You're all good. Thank you very much.
Again, would you mind what did you last hear?
I think we were just talking about the data providers and where you sat. I sat in the middle of the group.
Okay, perfect. Yeah, so in the context of the big data providers who do offer services in the space, I think we offer a slightly differentiated services that we take some of the heavy lift out of getting the data into a format that you can do something with. So that's one context. There are other providers that do much more specialist, around pure portfolio optimization or pure signal generation. But we are offering a slightly more generalized service, where it's the data ingestion, the data optimization, the analytics that go with it. So, we haven't come across too many people doing exactly what we're doing at this stage.
So we have a number of other questions around the geographic split of customers and revenue, and whether or not clients are mainly UK based, etc. So perhaps Steve, you can take all of those.
Yeah, so I mean, if we look at the history of what we've done from a consulting perspective, it was kind of a split between the US and the UK, and I guess as a small company at that stage, we didn't have hundreds of clients, so it really was a handful in the US and a handful in the UK. I think our emphasis now is we have obviously a strong foothold in London, and we want to very aggressively grow our client base in the London asset management market. But we also have our sales development head based in New York. And that's with purpose, because we also know New York is another market that has a big asset management industry that's in a very similar position, where there are a number of firms that want the acceleration of modern tech, and we think that we'll be well placed to help them. So I think, in terms of what we anticipate, is a reasonably even split between the UK and the US. But as well, I've also learned over the last few years, is you also go where you get the least resistance and where the most money comes from. So we'll tell you again in 6 months to see who's signed up the quickest. But I think at this stage, our goal is to expand our footprint first in the UK or in London. But again, if we get a lot of interest and traction in New York, that might change.
There's a question around how big the sales team is, and is this a key area to scale up over the coming months?
Yeah, so it's a good question, and it's a question that we've had a lot, which is it's actually a switch at the moment and we've been in what I would call, when you start, you're in innovation and discovery mode and hope that you find something of interest. Then you get to a point where you say, okay, we found what people want, and we've been in build mode for some time. And now that we've been building, we're actually switching to sales mode. So we have, we've hired a very senior, successful sales guy recently. But the other sales supporting act is myself, is Matt, is Jaco, and as, I guess, product experts and domain experts, we're the next best salespeople. So yes, that's absolutely where we certainly are shifting the focus of our senior executive guys to be the sales team. And we have a sales support function within this as well, where, we can obviously get in a number of doors. We have to present a compelling use case as to why we're the right product for a company. And then we have a team of 2 at the moment, but we're hiring for more. That is going to do the kind of now you're on board, let's get you set up, let's get the system set up. So yeah, so it is a big focus for us, and certainly over the next 6 months, there's going to be a lot of activity there.
So a question here about the scale of the opportunity or the scale of the market, and whether or not this could become a billion-dollar company. I did want to just turn to slide here in our deck, which there's been a fair amount of research in recent years around the scale of the AI and machine learning spend, particularly in the asset management sector. And I think that's part of what we're excited by here. Obviously, we are offering tools within this space, but tools that are in demand by asset managers, and you can see that just in the speed of the acceleration within the AI spend, with AI spend growing to 8.3 billion by the asset management industry, growing at a combined annual growth rate of 41%. So it's something that there's no question that asset managers are recognizing the importance of, and that's demonstrated by the money that they're spending on it. And it really comes back to my comments at the start of this presentation around how there's asset managers and the financial services sector generally are recognizing that this is a step change for them. This is a point at which to survive, they need to invest in these technologies. They need to be data capable. They need to have the skill sets to process large amounts of data and to apply the learnings from that data to augment their investing strategy.
Yep, that's a good answer.
Good. A question: How have customers and prospects reacted to the news of now being listed on the London Stock Exchange?
Well,
that's you.
Yeah, no, actually, I mean, it's been quite a journey to get to the point of listing, and I guess the sheer amount of work that has to go into getting to that point is exhausting. But what I can say is the reaction has been phenomenal, because the clients that we've been working with for a while are saying, "Wow, it's amazing to see how you guys have grown. It's amazing to see how quickly you developed and the demand." But I think more interestingly, it's given them a sense of comfort that we weren't going to disappear. Being a startup company, there's always a risk when you're pitching for business that you're doing something for another company that's, well, what if these guys don't stick around? What if they don't last? So there's always a bit of a concern. And just the sheer number of emails and phone calls that we've had in the last week have been this: phew, you guys are here to stay. Oh, and by the way, we've got all these additional projects we want to talk about. So I think the reaction has been, a lot better than I could have imagined. But also, when we published the new website and we started to broadcast, what we're now going to be selling, specifically on the ESG side, the unsolicited phone calls we've been getting from friends in the industry we know to say, "Okay, great, you guys are ready. Let's go. We want to talk to you about how you can help us." So the listing has absolutely helped us, and obviously it would have raised the profile, and there's more press and coverage about it. But I think more importantly is that we're no longer a small business, that that given unfortunate circumstances can disappear. We're actually a business that is well capitalized. It's got a lot of the support, and we've also managed to attract some incredible people. So I think it gives other companies more comfort that we're here for the long term.
So, question: are you seeing clients ask for other data from other areas other than ESG, such as crypto?
So it's interesting, like machine learning, AI, and crypto all intertwined. We have, and we've actually spoken to a few crypto companies that share common platforms, and I made a comment earlier around there's a common theme across all of this stuff, is that with all of the interesting process and analytics, you have to do the boring stuff well. So the interest around crypto is also around, well, how do we make sure that we can process and analyze information effectively and on a repeated basis? Mm-hmm. So we have actually had a few inquiries around companies where they're asking us to help them from an infrastructure perspective. I think we're going to get more, but yeah, I think that's next week's challenge.
Yeah. Another one: who are the major shareholders of the company, and how are management incentivized? I'll begin with an answer on that. Yep. So there are a number of historic institutional and other shareholders of CATENA Group, but at the point that this transaction completes, pending shareholder approval next week, the primary shareholders of the company will effectively be the co-founders of Insight Capital and some of Insight's shareholders. So management is very well incentivized to meet targets and to grow the business rapidly.
Yeah, and I guess just another point on that. One of the fundamental beliefs we have is that the people that work in the company need to feel that they have ownership in the company. And, all of our full-time team have shares in the business. And, being part of a listed vehicle means that those shares actually mean something. And I say this with a smile. having worked in Silicon Valley, part of the negotiation is we'll give you very little salary, but we give a lot of share options because we're going to become a unicorn. And as most startups don't become anything. So the fact that we can actually give people a shareholding in this business is very important, because the better we do and the better they do in their job, it's going to have a direct impact on their own lives.
Another question, when will your latest figures be announced? So the latest CATENA figures will be announced by September, and those will be, as we change our accounting reference date, those will be 15-month figures to a 31st of March accounting period. But as the Insight Capital acquisition was not done by that period, Insight Capital figures wouldn't be consolidated in that. However, I can commit that with the appropriate support of our broker Nomad, we will be providing as regular trading updates as we can over the course of the coming months.
That's fantastic. Matthew, Stephen, thank you so much. You've answered every single question, so that's wonderful. Thank you. And if there are any further questions that do come through, obviously Matthew and Stephen will be able to review those post-event. Perhaps I could just ask you both just for a final few closing words just before we redirect the attendees to give you guys some feedback.
I'll just say very quickly, thank you very much for taking the time to listen to us today and to ask some questions. For the new investors who've joined the call, very much excited to have you on board, and excited to continue the dialogue with you during the course of the coming months. I know I speak for Steve in saying that we are, as the new INSIG AI team, very excited about the coming months. I know that the broader INSIG AI team is excited about the future for us. So thank you for taking the time today, and we look forward to having further conversations with you.
Yeah, I echo that. I guess our belief is, if we continue to focus on building solid software with exciting technologies, the share price should follow. We think we've proved it with our 3-year history with our current client base, and our goal is to continue doing that, but we're just going to do more of it and quicker. So so let's watch the space.
Fantastic. Matthew, Stephen, thank you very much indeed for updating investors today. Could I please ask investors not to close this session, as you will be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from the website, the feedback page will appear in front of you. If you've accessed the meeting via the link sent to you in the email, you'll simply be asked just to log back in. It takes just a couple of moments to do so, and will be greatly appreciated by the company. On behalf of CATENA Group PLC, we'd like to thank you very much for attending today's presentation. That concludes today's session. Thank you and good afternoon.